Happy Friday, traders. It's 8:03 a.m. Chicago time, 9:03 Eastern on the 12th of May, 2017. Thanks for joining me. It is Friday. It is like Friday. Please take a moment today to hit the like button on YouTube. If you don't see it in the embedded image in front of you, if it is embedded, if you're not watching on this on YouTube, then hit the YouTube icon at the bottom right, which will take you to the YouTube live stream, and then you can hit the thumb up there. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance right now is again um, more of a mixed bag. There's really no real leader here. We have gold leading the pack at up $6.80 at $1,231. Up 0.56%, followed by the yen, the euro, and then the US 10-year. This tells me that even though it's a mixed bag, the money's leaning towards treasuries and um, towards safety. The overall news overnight, not much going on. China's lending definitely heats up. The numbers coming out of China for the bank lending came out at 1.1 trillion yuan versus March's 1.02, and so there is a fair amount of information there that leads us to believe that there is a bubble going on in China right now. I think that's potentially the next big spot for a burst, and it would have worldwide effects, in my opinion. Um, And this morning at 7:30 Central, 8:30 Eastern, we got U.S. April advanced retail sales month on month 0.4% versus 0.6% retail sales. Ex auto 0.3% versus 0.5. Both numbers disappoint. AP the U.S. April CPI month on month is in line at 0.2%. CPI ex food and energy is actually lower at 0.1% versus 0.2. That's important. Um, that's important um, uh, for the Fed. As far as what we are expecting today, looking ahead, the key number that's coming out today is the University of Michigan confidence. This is the prelim figure. It tends to be a mover. Comes out at 10 o'clock Eastern, just a half hour after the open. For May, the expectation is 97.0, 97.0. The prior is 97.0. Also at 10 o'clock at the same time, business inventories in the U.S. for March, 0.1% expected. As far as speakers, we have Fed's Evans speaking currently. We have Fed's Harker speaking at 12:30 this afternoon, 12:30 Eastern, and that's it for our announcements for the day. Let's take a look at what we expected yesterday versus what the market did. Here's the primary expectation yesterday. The key play was to the downside. Was to the downside. I was looking for, which didn't happen, and I did comment about this. I was looking for really ideally in an ideal world, which we're not in. Um, it makes things interesting, I guess. In an ideal world, we would get responsive buying towards 23.95 with the key resistance at 23.93, and the goal yesterday that I discussed with you that is that to look for the short, to look for a failed high or liquidity on your book map, and look for a short in the 23.93 area to target to immediately target 23.87, and then to for the extended target to be 23.84. Okay, that's the primary hypothesis. That's a hypothesis that actually worked out, except that it opened, it test drove, and it tested and it drove down. It was very difficult. It was very difficult to jump on that train. Secondary hypothesis, which started to appear later in the session, is an open auction test down higher low, and then a rotation to 93 for initial resistance, and then a potential push to 95. Here's what actually happened. There is really no opening swing from yesterday because there was a drive. So there's a drive down. So here we opened at 90, 91 and a quarter. We pushed up to 92 and a quarter, just 3 ticks short of the 93 area that I was looking to sell. As I said, there's really no opportunity, at least for me, unless you saw something or you just kind of plugged your nose and dove in. Um, there was really no opportunity for me personally to jump short on this immediate push down to 80.75, and it just blew right through everything to the downside. Um, what we had is we had the impulse move, then we had the pullback, consolidation, and a continuation. A continuation is a double bottom at 2370. Is based off of a double bottom at 2379. 2379 is the FOMC low. If you're using flex levels, you probably have had that value since Monday, 23.79, and then the market started walking. And the first chance that I had to do anything with this is this pullback to the zipper. Unfortunately, I did not participate in that. I was looking for the short instead. The short, the short setup was pretty clean as far as I was concerned. We moved out of 3 days balance down, so I was looking for a short for a push down to that low at 23.79. We have a weak low at 23.79 with a small term, short-term double bottom. So that made for a pretty good target from 23.86 or 23.85 and a half all the way down to 23.79. That would have been the key trade of the day. That trade did not work. We ended up with a 5-point push through, a stop out, and then the market started to walk. Now remember, up to this point, the initial balance high and the initial balance low were still intact. So we had the IB stat, which states that in the past, historically, the probability of the IB high and the IB low remaining unbreached or unbroken until the end of the session, the probability is around 3%. So the expectation is for the IB high to break. So the next thing after the mid got taken out, the next thing was to look for an area to get long for the IB break to shoot for 23.6225. But guess what? Guess where the high of the day is ended up? 93.50, right at the LVN. Right, that was our spot to get short, but we didn't have an opportunity to get short. Instead, the market just pushed through to it on the way up and into the close. The profile overall yesterday, said that there was no consensus on value. The value area here is not valid. There is no value here. The market is unable to find value in this area. We've moved back up the MC point of control. The balance in this area is at 83.50. We've moved back up through it. And then overnight, we've pushed back down to 84 and a quarter. So we stopped 3 ticks short of the MC point of control. So my point is, and I'm talking fast, my point is that there is a lot going on in this area. And as I discussed in yesterday's Trader Bite on Hypo 1, the test, break, pull, push, I said don't overstay the short because the market has been bouncing back up on new lows. And I showed examples of that towards yesterday's Trader Bite. I strongly suggest you go back and look at that. And here we are. The market makes new lows, new recent lows, and it pushes right back up as expected. So you don't want to overstay your shorts here. The market is definitely on a bull cycle still. It's roaring forward, and the selling is short-lived. So you don't want to stick around. Make your targets to the short side modest. Keep a runner on if you're trading more than one contract. Keep a runner on, but be ready to scratch or take that off fairly quickly. If the market actually does sell off and we actually have a crash and whatever all these perma bears keep telling us, it's okay because That doesn't happen in one move. We don't move from 2,400 to 2,000 in one sweep. You'll have several opportunities and days of selling to supported selling to trade the short side. The market says that we're trading higher and higher in the higher time frame. The OTF is on the long side. And so you've got to be cautious with your shorts. Trade smart, don't trade stubborn. Don't trade your ideas of what you want to see. Trade what the market's actually telling you. That's there's a big difference there. So the point of control is near the high. We've created another LVN at the mid at 86 and a quarter. This morning I'm expecting support here against the overnight point of control, and I'm looking for the market to push higher. So looking at the overnight session, just horrible profiles. Look at this thing. It's just these profiles have just been ugly. Uh, a weak low, weak low, weak high. Really, not much. There's not much to glean from the overnight session. The volume, however, has been pretty good. The participation has been pretty strong, and that's what we're seeing, right? We're seeing this pretty strong participation. You may have noticed that the depth of market in the ES is quite thick this week. We're seeing 1,300 lots, 1,500 lots at every price, as opposed to, 4 to 6 to 900 lots up and down the book. We're seeing 15, sometimes 16, 1,700 lots just stacked in the book. So the heat map is nice and bright pretty much all day. So we're getting less range, although yesterday we had pretty decent range relatively, 14 points. We're getting less range, and so there's more for the participants are having to stack more of their orders, and that creates a lot more liquidity. Another hallmark of a potential break out of an area, the depth is potential buying and selling. What we see on the chart is actual buying and selling, and you have to put more weight on what the chart and the profile on the chart says. So the market has turned up and is pushing higher. I'm expecting it to continue higher this morning. The primary hypothesis, my time is up. The primary hypothesis is I'm looking for the market to open in an open auction. I'm looking for it to test higher immediately, test lower. I'm looking for wider swings early in the morning, and then I'm looking for the market to break higher and look for 23.95 and a quarter for a quick test, and then I'm looking for it to go sideways and rest. I'm looking for the market to rest today and bring this point of control up to 23.95 and a quarter. It's likely to be a balance day. That's my primary hypothesis for today. So any push lower on the any push lower on weak rotations, I'm going to buy this morning. That's my plan, not your plan. It's not a trade recommendation. I'm not telling you what to do, but this is what I'm looking to do. I'm looking for any pushes lower to find support in the order book and on the chart to look for an LVN to trade against. I'm looking for that 23.85 area to be initial support, and I'm looking to buy that. Bank 2 points for a scale out, move my theoretical average out of the way, and get a good cushion into the trade for a push through yesterday's high. This is a weak high yesterday, weak high with the point of control behind it, and we did not push the overnight high higher. Very odd behavior. The overnight high is below the point of control from yesterday. You don't see that often, especially with a point of control that's so concentrated and at the high a day. So it's just a very interesting setup. Yesterday's volume was a little bit higher than normal, 1.2 million contracts versus the 1.06 million contracts on the day session. So this is the primary hypothesis. Secondary hypothesis is an open that tests higher, makes that break, and then fails back in. And if it does, I'm looking for it to hold in this 85 area and just sit in a holding pattern. It is Friday into the weekend. There's nothing special about this weekend, but I'm expecting that we're not likely to make a move into the close today. I'm looking sideways. What has the market accomplished overall? So those are your two main hypotheses. I know a lot of you will drop off, so let me remind you to hit the like button. Please do me the favor of hitting the like button before you head out. That does mean a lot to me. So please do that. But overall, this is what we've accomplished. This profile right here. We have an HVN up top, a secondary. We have a key one that we've left below, and a nice taper at the top and bottom. We are still in balance. We have not gone anywhere or done anything, and that's why I expect the market to finish up somewhere in here or somewhere in here on Hypo 2 today. Okay, remember it's Friday. Not a good day to be Billy the Kid and just fire off your guns at anything that moves. It's a good day to be picky and to go into the weekend with a nice stable view into Monday, as opposed to a hole in your pocket and a heartache and the need to make up to perform well next week. Make sure make sure you're creating goals on Sunday night if you're serious about this, and make sure you're comparing them with your actual performance on Friday night. Just if you're committed to this, you need to really measure what you're doing on a weekly basis. Good luck today, and I'll catch you tomorrow. Take care.